What's going on, everyone? We're going to take a look at Tesla's intraday 5-minute time frame. I'm going to go over some supply and demand zones. Now, Tesla, had an initial spike with everything off the open, coming off that CPI print, came in at 4, right? It was expected at 4. Market initial reaction was to the long side. We kind of put in a high, came down, on a 5-minute time frame, kind of flagged a little bit, put in another high, and then pulled all the way back, right? Majority of names, including the NASDAQ, the Qs, the SPYs, all pulled back into basically yesterday's zones, right? So what that's telling you is that the initial move off of CPI was bullish, and if you caught that, you're probably not even watching this video because you made a lot of money catching those calls off the bell or pre-market. If you trade pre-market, if you trade futures, you probably caught that massive spike. So you guys are probably already done for the day. If you're currently watching this video, it's either because you're still in a trade, you're looking for a trade, you're maybe trying to decide, what options do I have to kind of play this into tomorrow. So if we're looking at Tesla's daily chart, Tesla's right now flat on the day, right? We're only down 15 cents, which for Tesla, having an average true daily range between 5 and 10 points in a day is absolutely nothing. So if you kind of notice the light gray box that we have here, we kind of spiked off that CPI print, put in a high, like I said, kind of flagged a little bit, put in a new high right off the bell, right? And you can see here we back tested this 20 period moving average, which is why the 20 period moving average is so important, at least for me, is because it provides a good day's trend, right? If we're trading over the 20 period moving average, I'm not looking necessarily to be buying puts. What I'm looking to do is either wait for that consolidation into the 20, take the reclaim of the loss of the 20 here and kind of play it into the previous high of day or new high of day. And when we lose, right? So if I pull out my drawing tool, when we lose the 20 here, I want to look how much room do we have to the next area of support. So this 200-day moving average, there's a big gap here, right? So anytime the 20 SMA gets super extended away from the 200 period moving average, we know that there's a potential for a short position if we do close below the 20 and we get a nice continuation candle. So on here, this candle here, I actually did go short on Tesla, took my normal lot size of 10 contracts and honestly sold within the same 5-minute bar. Now I didn't capture this, or this move, but again, as a day trader, you're realistically not trying to catch the whole move, right? I feel like newer traders or people that have very, very small accounts, they like to get in here potentially, right? Get in here and then they want to hold, which is fine. But just as you start to play with more size, when you get this continuation and then sometimes chops around and then tries to trap you out, that's when you can start to go into panic mode. So I just like to take my profits where I know I like to take my profits. It is how I trade. I'm very comfortable taking my $2 off of Tesla. I'll do that hand over fist all day, every day. I'm not really looking for a huge move all the time. But if we kind of see where we came down to, this green box down here, this demand zone, is yesterday's lows. Okay, so yesterday's lows ranging from a price of 166.60 all the way up to around 167, 168. Okay, so what we have here is about a $1.50 zone that's acting as a level where buyers are comfortable kind of stepping in, right? So if I just kind of rewind back to yesterday's price action, look at the low. We came down into this demand zone, and it's realistically here where we kind of hit this 166.50, where we bounced in between this demand zone and finally got out of it. Okay, so as of now, as long as we are trading above this demand zone, we have to be buying calls or buying stock down in demand, and we have to be selling for profit in the middle or closer to the top of supply. And when we get to supply, we need to be thinking about selling puts and or shorting stock into the middle of that range. It's not until we lose the low or we break out from the top where we can really start to play the breakout. So currently we're range bound. You can see here came down into that demand zone 167.87, and then we kind of have bounced here. So we've got a little bit of a gap here to kind of fill, a big open space where if the market does want to run into the close, potentially we can start to try to get back into the 170s. Again, doesn't have to be possible. We could still come out of this New York lunch hour, lose this 20 SMA, come down into our demand zone. But again, I'm not really looking for a short here until we lose 166.50s. That might be 1 or 2 days away if it happens. And if it doesn't happen, then this here is an ultimate spot where you're going to want to be buying, right? So if anyone did bounce out of demand in this zone, you want to make sure that you're holding until we put in a new low, then you're stopped out, or if you're giving it a little bit more risk, until we lose this low and then lose the demand zone. So if we lose 166.50, this would be your out. You've got to get out of the trade there. Just, you are wrong on the trade. It did not work. If anyone plays supply and demand like I do, then you would have known that as we came down into this zone here, we put in a little red candle. We had no more continuation to the downside. Look at this red candle here. This is a big red candle. This is a big red candle. However, this next red candle, there's no follow through. There's no follow through. So screen time and experience will come. You'll start to pick up on these things. But when you have a big red candle and the next candle has no follow through and you don't put in a new low, you might want to start thinking day's low. Not necessarily that we're not going any lower today, but for the short period of time, this potentially could be the low. So what's the next candle that comes? Green candle takes out red. This is where we're going to go long here, and we're going to use the low as our stop, or the low of this demand zone, because we know we've got some buyers in this area, and you can see we are up pretty nicely. So even if you took this as a little bit of a scalp at the demand zone, you can see that your entry would have put you in this candle, so you'd be in a price of around 168.30s and currently trading at 169.40. So you're up $1. For me personally, like I said, I love to take dollars out of Tesla. I love to take dollars out of Nvidia. Anytime I can take 10 contracts and get $1 very, very quickly in under an hour, I'm going to take it 9 times out of 10. More than likely, I'm going to sell 8 contracts of my 10. I'm going to hold 2 as runners, use those last 2 as break even, and that's how I'm going to kind of play it. So as of right now, what we would be looking for on Tesla is to play it from 169.30s potentially into 170. We would really have to clear out this little bit of intraday supply at around 170.15. Anything over 170.15 needs to put in a new high, kind of come back, chop around, hold this area, and then start to push off. And then we would be thinking about that 173, 174 zone up here. So just kind of wanted to put out the supply and demand zones. If you guys did want to play it right now, we're in a perfect buy zone for Tesla. Again, remember, today's low is your stop, or if you're giving it a little bit more of a risk, 166.50 would be your stop. Again, for shorters or bears or whoever, if you are looking to play the downside continuation on Tesla, we need it to break 166.50, put in a new low, back test this former demand zone, act as resistance, and then take out the new low. And as soon as we can do that, then we can go ahead and re-get short, right? So kind of putting this out there now. Tesla, we started this video down 15 cents. We're up 20 cents here. So quickly, within a matter of the last 5 to 8 minutes, if you would have been playing this potential bounce, you're up 30, 40, 50 cents. So depending on your position sizing, if you're playing 1,000 shares and you're up 50 cents or 40 cents, that's really, really good money. If you're playing 10, 20, 30 contracts, that's obviously really, really good money. If you're playing one contract, yeah, I understand you're probably not up that much, but it's okay. Just continue to hold, continue to trust the charts. As of right now, we're trading over the 20 SMA, which is good. We are kind of being stuck at the 200. So again, I would like to see a significant green candle off this, or a significant red candle. If you are a scalper, you would look at it like this. We would lose the 200, lose the 20, and you would try to scalp this between 168.90 back down into 167, 168. So there's a potential dollar room down there if we do want to come back down and test today's lows and get back into this demand zone here. So again, it all depends on what type of trader you are. Please identify, are you a scalper? Then you're only looking for small moves. Are you a day trader? Or you want to hold these trades a lot longer because you're playing smaller position sizing? Then you want to play these bigger demand zones here. You want to be a buyer down here. You want to be a seller in the middle. You want to be a seller up here, okay? So we want to be seller up here. We want to be closing our position here, and we want to be rebuying here until we break out or until we break down. That's how you kind of have to play. This is supplies. This is Tesla's supply and demand zones for today, the 10th. It's currently 10 a.m. Pacific Standard Time. My name is D. Anthony. If you guys want to join the Discord where I'm trading live each and every single day, make sure you guys join the Discord. You're going to get access over there. If you guys want one-on-one coaching to go over a specific strategy and a specific training plan built and tailored to you and your account size, and you want help getting funded to become a funded trader, and you want one-on-one access to coaching for mentorship and psychology when it comes to trading, I will help you with that. Visit evolutiontraders.com. We are going to get everything started, and I'll see you guys on the inside.